Hello, everyone. Mike Arnold here, co-founder, Path Trading Partners, along with Bob Iacino. How is everyone doing this morning? Good morning, Ken. Good morning, Wavy. Morning, Amit. Morning, Davey. Yeah, in economic data, there was very little market reaction to it. So, again, month and quarter end is going to dominate. Good morning, mates. Another day, another trade, exactly. And if there's no trade, sit on your hands. And by the way, if you are new here, please do consider subscribing, ringing that bell, and hitting that like button. Longer term viewers, please leave some comments and like the videos. So let's take a look. Uh, Mortgage applications lower than normal. ADP employment change slight beat. Final revision of the GDP fourth quarter coming in less than expected, and actually inventories made up 77% of that. Core PCE in line, probably why there's not, and then price index a little slightly lower than forecast, but final prices quarter over quarter coming in a little more. Again, no reaction, by the way. We're all doomed today because it's 66.6% of a 50 basis point hike, so keep that in mind. Zero gamma line creeping up 45, 47, but we're still well above that. By the way, if you follow the headlines, you'd be seeing that, you know, the peace talks in question, big pullback. Isn't there a lot of this rally supposedly off the peace talks over the last couple of days, and now this is the big pullback? Gets into an interesting situation, though. We're just pausing sideways. So going in here, again, remember, watch your candle bodies, not the wicks. So you get really a lot better support and resistance by using candle bodies. You see there's the level for the breakdown in the S&P, roughly at the 4-hour rotation zone. You do have a clear path move, but it's not a fantastic one because there's another key stopping area, at least in the S&P, between here and here, roughly. So until I really start seeing momentum below about 45.93, it's not much, and then I'd be watching the bottom of the 4-hour rotation zone. So there's lots of stopping points. Even if we do pull back, it's why these first little top areas are hard to short until you get the reactionary move and a potential double or a rollover move. It is just price actions looking tired. We had some minor divergences up here, but nothing major to just say, hey, I'm throwing a big short position on here. Because you come back here, you have major support right in here. So this is a problem. Coming back down, you have all these stopping points, all these support. So unless I see some serious momentum to the downside, from my perspective, and again, my perspective only, it is very scalpy to the short side, and there could be some sucking moves to try to trap people because so many people are watching for that down move, and then a possible breakout. If it breaks out to new highs, here's sort of where we got to use the most recent little pullback area. Let me put on here again. I forgot. There we go. I'm putting on the minor levels because we could be slightly choppier, and then I'll focus on really this 46.43 and then 45.48 to 46.62 to the upside. Again, to the downside, pay attention if we do break through this 45.87 to the 45.71 to about 45.78 right in here. That's going to be key. That's where, again, it gets really challenging. Nasdaq pulling back. We popped above the 200 yesterday, holding that right now. Pretty much the same strategy with me on the Nasdaq. We have this little basis trying to break below here now, but I'll really watch that into the open. The next key area, I'm just going back to this 1577 harmonic with the 50 on the 1 hour, and I mean, it's 14,983, 77 to 983 is the major support area. And if we did drop below there, I just keep watching the daily rotation zone. But keep in mind also, you have right where that flat 200 was, and that harmonic is, you have this prior peak. So again, there's lots in the ways of a bigger pullback, and we're still going into month and quarter end. So it's not great shorts to the downside, at least yet. Not strong setups to the upside. I'm just keeping the same stuff from yesterday. I'll actually bump this up just a bit. My major area is actually 15,313 to 15,328, and then I just update that with as little pause. And this was just a horribly sloppy double top. Yes, it was valid, but it's pretty much already hit its targets. Dow, I sound like a broken record here. Into that 4-hour rotation zone. But next major support point. Even with a pullback of about 34,980. And then the Dow's got a little more area to run. If it can get below about 34,900, then we could see that return back down to the breakout area about 34,775. To the upside, targets are about 35,200, then 35,281. Those are what I'm working on. Russell, little pullback after hitting that significant level on here. So this trade I talked about yesterday with that breakout play, retest of that breakout zone is pretty much over. If you were trailing, then I'd aggressively move up a stop on this at this point. The next target up would be 2150. DAX, the breakout stalling out at that harmonic cluster, 62.5, and then rolling back down to the breakout level. So it'll be interesting to see if this re-enters the channel, because if it does and bypasses the middle section, which is around the 50 on the 4-hour, I'd watch for a potential breakdown play and they suck people in and then take it the other way. Crude, this is interesting for crude. We bounced off yesterday off the 50 pretty strongly. I said there was an aggressive daily buy on a close above this level, and now we have a little 1-hour head and shoulders. Shoulder, it's a little sloppy, but it's still tradable on a 1-hour. Shoulder, head, shoulder, declining neckline, close above, projections from where it broke. So I will be keeping an eye on this. Targets, it's back to that 50% harmonic, and the projection happens to line up right at about 112, then 114, then back to the potential high. So those are the triggers for that. There's not a great walk away stop. What I'd be watching is if it would become invalid if it starts dipping below about 103 again. But until there, just keep an eye. You know, we have this rising rotation zone, so even if it comes back down below the neckline, your first warning sign, it could be failing those about 105.78. Gold, slight bounce, no head and shoulders pattern on that. You know, commodities were crap yesterday, and now we're still caught in this range. So this is where I watch to pick some up and unwind, but there's no great pickup level besides that other key area. Silver did get some of this yesterday, now back in this range, but still caught in this area. So if it does roll over again, I'm still focused on 23,875. But again, it's just scalping in here or trading around a core position from my perspective. Notes. We ran into the daily rotation zone after hitting the first target on that 4-hour double. So I'm still watching for this area to return to support and then another rotation back up. Next target's higher again, 123 and then 123.09. So that's where we sit with that. Still definitely in play to the upside, just bouncing off that first target and the daily rotation zone, which happens a lot when you're going against the daily rotation zone. So now it's pulling back, and then if we can get that turn up quickly, I'm watching for 123.09, then a possible return to the weekly rotation zone. But my first target would be $124 index. Again, we still have the potential weekly double top. VIX still, I mean, slight gap up, but there's no fear in this market. We'll see if anything changes with that, so I'll keep keeping an eye on that. Tesla looks like it's going to be pre-market gap down. Again, we start getting a close below about 1071 on a 4-hour basis. I talked about a potential exit there. Key area I'm really focused on is this 4-hour rotation zone with the low from the 28th of March, because we get below that, I'll be targeting that gap fill for the bigger pullback, stalling out at this harmonic and the 75% level. So if it does rally above there, now I'm just going to go to this harmonic, to forward one. A rally above here, we got to look at the shorter. See, this has been so crappy with the pausing. I mean, this is how insane these rallies have been. Really above 114. I just have to go off 133, then 1133, and 1159. Let's see. Commodities resume. Yeah, they're on the rise a bit, but they're still caught in this consolidation. I'm really focused on crude today to see what that does. Crude could be interesting. Also, remember with crude, where are we? Economic. We have all the crude numbers coming out at 9:30 Central, so don't get caught off guard by those. Mike, just realized something I must have missed on yesterday's class, how you draw your 125 retracements on the Goldman commodity chart. If you can touch on it, initial point, final point. Take a look. Initial point right here, same. So I have the retracements and the projections. Initial point, final point. Is that not one? Yeah, it's just I drew it on a different time frame. Same points. So these are the retracements. Watching the 62.5. I don't know what you, that's just where the top and the bottom are. And then for the projection down, if it breaks the lows, it's still from this high to this key low. Key area I'm watching is if we guys get super bullish again, if we can get the move above here. By the way, we closed above yesterday's bar high, is an aggressive buy pattern on the commodity index. PayPal, if you draw channel lines from 819, you see this pushing out of the downward move. Does this mean real reversal, or do you see? I'm not changing my PayPal. We have the double. That's all there is. It's pushing up, but the double target's my big thing because we're still against the daily rotation zone. And it's been lagging on this move up. So the only trigger is this short-term double. Next target's 124.72, 128.45. As long as you don't really drop below this warning sign with the rotation zone, those are the two targets, the upside. Other than that, you know, we have the month-end push, but this has been lagging. So it's tradable because you have a high probability bottoming pattern, but the targets are only up to this 128.45, and you have the 50 in the way. And you still have declining weekly, and it's underperforming on this bounce versus the way the Nasdaq and everything else has gone. So yeah, nothing's changed for me. There's slight upward potential prices going into month end, and then that's it. I'd need another trade setup to really get bullish on this because we're against the weekly rotation zone. So if it runs above 128.45, you have a little move back to about 130, but this is where I have to aggressively trail a stop if I was long this. So I don't understand. Does this mean a real reversal, or do you still stand behind what you said yesterday? Again, we have the double pattern. Does this mean a real reversal? This is the problem. It's a short-term pattern. Here's what people mess up, and this is going to be my friggin' rant on Friday when I do a classroom thing. People mess up short-term patterns for long-term projections. Okay? This is a short-term pattern. Long-term, we're still against the rotation zone. Could this theoretically be the low forever in PayPal? Yes, theoretically. Is it worth to say it's a double bottom on a 4 hours going to be the theoretical low on PayPal? No. It's a short-term pattern against a long-term, bigger picture downward trend. If we roll back over and form a better bottoming pattern, could it shift in the future? Yes. But this is a trade, not an investment. This is a quick little trade that triggered, and we got 3 targets to the upside. Other than that, if we get another trade that triggers, it could be a potential gap fill, but we're still going against a weekly rotation zone. And if the macro rolls over starting in April again, would not want to be heavily long in PayPal. Let's just check on where we sit with the yield curve. Again, little bounce on this, but still watching for another rollover play on the 10s, 2s to really solidify a dip below everything else. Let's just check on the yield. Still, I'm actually going to watch for another potential little push higher than a topping pattern for the bigger pullback in the yields, which could correspond to a top in the market, then a rollover, but we don't have the pattern yet. So there's nothing left to do here. It's just this little 1 hour thing here. Other than that, not seeing much else. Just, again, it's tactical trading. Tactical trading, I got to peek in on. Again, stalling out at that 200 with Bitcoin. Still rising rotation zone, triggered this longer term trend. I'm going to see if it can push again to 57.27 to 51.621. End phase upsize target 218.03. That's the next target. Keep in mind you still have a gap right here also. So you could get a minor reaction there, but I'd be watching that gap fill too. Just so you can, if you're trailing, that could be an area to bump up a stop right there, right in front of the 50% level. So that's your next target on end phase. And Kalani can't wait for Friday. Is there a measure of the strength of the US dollar other than comparing it to another fiat currency? No, there is not, because it's not backed by anything. So it's only a comparison. The US dollar is always a comparison. And remember, the dollar index is against the basket, but the major component of that is the euro US dollar. The major component of that. So that's, again, a lot of these comparisons are against the euro US dollar. I mean, this is going to drive. The euro US dollar's coming up against its 50 on the daily. You break above there and it's prior right here. So you can see this key area on the euro US dollar. You start running into here. You have a clear path move pretty much back to 127.12 area. You got a minor stopping point here, which I will pay attention about. Oh, 111, 112, 111.95, 112 right in here. But you start getting above there, then you'll have the rollover in the dollar just because you're getting strength in the euro. And you can see if we go back to the dollar index, again, this is now just essentially a sideways channel, but still on the weekly, you still do have this sloppy double. Almost the horizontal channel targets are virtually the same. They're a little tighter than the double, but I'm really focused on a breakdown of about 96.91 into the weekly rotation zone if we break below 97.78. All right, that's where we stand. Let's just check back in on the S&P. Probably just that pause area into the open. My little initial thing I'll be watching on this is on a scalpy basis is a break above 46.16. If it can hold there on the open, that's the first bullish sign for me, but that's a very short-term little area. Again, with that, I will wrap it up. We'll be back this afternoon. Hope everyone has a fantastic trading day. Talk to everyone later. Bye for now.